Joshi writing from Thiruvananthapuram. Their queries on Ajanta Pharma. They bought the stock at a price of 24.30. Gaurang, let me come to you first. What is the fundamental view? Do you think the company is good to hold on to in the pharma space, or would you like to recommend any other counter?
Well, so here again, we used to cover Ajanta Pharma, but post our target price in place, we have not continued with the coverage, but remain extremely positive on the entire pharma basket. Whether it is to do with large cap names or certain mid cap names, we have a positive view on certain companies, and our understanding is that despite of whatever tariff related, generic related announcement and clarification has come in from US. I think the global market remains extremely positive, including a huge opportunity in the domestic market. So Ajanta Pharma happens to be one of the stronger companies in the mid cap category, if you may. And my sense is that the combination that will do well over a longer period of time is the CDMO related companies. So remain positive on the entire pharma pack. I won't give specific on buy, sell, and hold on the Ajanta Pharma, but it happens to be a strong balance sheet.
All right, Ajanta Pharma happens to be a strong balance sheet, and CDMO plays are likely to do better in the pharma space. That's the view coming in. But Aditya, let me come to you for levels now. The viewer bought it at 24.30 and he's considering at a considerable profit right now. He wants to know whether he should add more at the current levels. What would you suggest?
Good question, actually, and a very smart viewer as well, because one should actually buy average at higher prices. So I would suggest, yes, he can go ahead and average, place a stop loss somewhere around his cost price, and continue to hold. In the near term, I'm looking at a target of 3,400 on the upside, and once that is taken out, maybe a 3,600 can also be seen. So a good stock at higher levels, he should look to average, because then average buying price will always be lower than the current market price, and on the upside can easily see levels of 3,400, 3,600 in the medium to slightly longer term time frame.
Okay, so 3,400 is the target price and you should look to average. That's the view coming in on Ajanta Pharma. But we have Narayan, who has written to us from Bangalore, and he's telling us that he's a regular viewer of ET and the show Buy Now Sell Now. Thank you so much. He's holding about 100 shares of HUL at an average price of 2,358 and 35 shares of Trent at about 5,117. He's asking for a 6-month view. Aditya, what will your technical view be on both HUL and Trent?
Let's talk about HUL first, Snehi. Unfortunately, the entire FMCG space, and especially this space, isn't doing much for itself. It's more of a consolidation that we're witnessing in the stock. Since he has a very short-term time horizon of 6 months, I don't see much of an up move in the stock. Could be more of a sideways consolidation. On the downside, 2,200 is the support. On the upside, 2,500, 2,600 is the resistance. So I don't see too much of an upside in the stock. Maybe you should move out of staples and look at something else within this FMCG space. Could be look at a consumer durables or something else, not staples FMCG just yet. Talking about Trent as well, again, there is lack of momentum. Stock has constantly seen lower lows, lower highs. And my sense is in the near term, stock is not going to bounce back anytime soon. Rather, if anything, after this sharp price correction, it will enter into a sideways consolidation, more of a time correction on the stock. So no upside on either stocks. If he has a very short term time frame, then maybe he should look to exit and buy again once both these stocks come in some kind of a momentum.
All right, so not much upside expected in HUL or Trent at this point in time. You could look at shifting to consumer durables.